Welcome back, traders and investors. We have Vlad Karpel here from Tradespoon. Vlad, how you doing today?
Great.
Okay.
The weather is nice.
Yeah, where are you at?
We're in Chicago.
Oh, okay. I hear we got 6 to 10 inches coming our way tomorrow. Is Chicago supposed to get that, or are you guys gonna miss it?
No, I think we're gonna get some snow, but it's been beautiful couple days, which we missed. They said
Okay.
best day since November.
Oh, yeah, same here. We had that yesterday. So just tell us about your educational background and also your background in the markets.
Sure. I started my background in financial markets back at Options Express. I was their first employee, helping build the online brokerage firm. Was responsible for all the technology, operations, and software development. And that's sort of my passion for trading options started. I learned how to trade options, took a lot of courses, and for the past, since 1999, I have been building software to help traders trade stocks and options. And I've been in the education business for a long period of time. I trained the computer science courses, and for the past 2 years, we started Tradespoon. It's an online educational site that provides trade recommendations and recommendations about stocks and option trading based on statistical analysis, algorithm, and research.
Okay, so you trade the stocks as well as the options then.
Correct.
Oh,
Correct.
okay, and are you are you systematic? So do you use input of technical analysis and volume and price action such as that, or do you try and analyze the companies, also statistically from a fundamental basis?
We believe in both. So we do statistical analysis and fundamental analysis and option analysis. So we combine qualitative and quantitative research. We have a team of equity analysts that, based on discount cash flow and other models, try to analyze what is the intrinsic value of the stock based on their cash flow and balance sheet. And once they analyze the companies, they assign a score. So all of our stocks have a proprietary score. And then we have a team of quant analysts that build software and quant models to try to automate the research that analytical team is doing. And then that allows us to scale and analyze the entire universe of stocks that have underlying options in it. And then we have different models to try to predict what the price of the stock will be at a certain time frame based on the quant models and backtesting for the past 10 years. And based on that analysis and underlying volatility, option volatility data, it's trying to predict where the stock is going to be in a certain time frame. And that would be the time of the entry and exit of the position that we recommend to our subscribers. So we truly believe in combination of qualitative and quantitative research, where you combine both fundamental and technical analysis.
Oh, sounds pretty thorough. So are you like on auto trade? Are you letting the computers do the executions for you, or do you just take all that data and then pick or choose what you trade? Is because I mean a lot of
It's
trading now is automated, and that kind of takes the the human nature out of it. Have you progressed to that point where you're doing automated trading with these options?
At some point we could and build a proprietary trading firm, but we believe we build technology for self-directed investors and for registered independent advisors who do not have software computers and who have a smaller positions, that tend to hold positions for overnight for 5 days, 1 month, 2 months period of time. So it's the later of your choices. We basically give you suggested 5 to 10 stocks, and we pick one. So we have a team of portfolio managers here that basically get together and decide on one pick of the day or one pick of the week. So we look at are you an active trader and how many positions do you have? If you have only 5 to 6 positions, then we recommend you one pick a week, and we have a portfolio that only consists of one recommendation a week. If you're more of an active trader or self-directed investors who actually have their own criteria, how to find positions and how to find good stock trade recommendations, then we provide you with one pick a day.
Okay, so
So
you're
it
not you're
depends.
not you're not really programming then. I mean, you have the high frequency trading and a lot of the big issues and well, a lot of stocks and stuff. So you're not getting down. You're trading down for anything as far as the HFT line, right? You're more
No, no, we basically, our time horizon is not minutes or, milliseconds.
okay.
Our time horizon is week or months. But
And
it's using very similar, uh, trend trading or reversion to mean that is utilized by high frequency trading. It's just
and
the time frame is different.
and who are your clients at Tradespoon?
At Tradespoon, I would say majority of our clients are self-directed investors, but we also have, probably 20% of our clients are portfolio managers or independent advisors that manages, discretionary business for their clients.
Okay, and just you mentioned Tradespoon real quickly. Is there a subscription basis to it, or is it different levels?
Yeah, if you go to Tradespoon and you go to pricing page, you'll see basically two portfolios that you can follow, and it's a quarterly subscription. If you have more than 6 positions, then you can subscribe for premium membership, where it's a quarterly membership, and you get all of our daily picks, you get all of our qualitative and quantitative research, and you also have a tools to our reports and trade idea tool that basically it's the same tool that we're using to find a trade recommendation. We actually expose these tools on the site which you can use. If you're more of an active trader and you want more trade recommendations, then we have an elite. Sorry, if you have less positions, 5 or 6, and you want to trade, and you only hold in position for months, 2 months, and you have a small portfolio, then we have an elite peak where we have only one recommendation a week, and where it allows us to run different models in the background and backtest them to find the probability of the trade. So it's just more thorough analysis and more research. And we have more time to run different models on every recommendation we provide.
Okay, so you work for Options House for a while, then you developed your own platform, your own trading company. Just going back and reflecting on earlier in your career, everyone has remembers certain trades, but what was the most important trading lesson you learned early in your career?
I think the most important is, especially for people who begin trading, is position sizing and managing your portfolio appropriately. Because ultimately, you'll be right and you'll be wrong on your trades, but you want to make sure that every trade your position sized accordingly, where you do not, even if you're wrong, your portfolio does not suffer to a point where you can recover from the losses. So you always want to allocate no more than 2 to 5%. But based on your portfolio size, you don't want to allocate more than 2 to 5% of your portfolio for each of the trades based on the risk. And as long as you can do that, then you can learn in your mistakes, or you can be wrong, and then keep trading your system. And as long as you have an edge and more than 50% probability, you'll be successful.
Okay, and what do you think is the most common mistake? I mean, we just kind of repeating, but do you think the most common mistake new traders make is just over trading and allocating too much to one trade or one position?
I think so. Yeah, I think it's overly allocating, and basically the psychology of trading. I mean, more than half of the success is how do you manage your greed and fear, and do you let your winners cut them short, and do you let your losers run long? So you want to basically build a system and try to take the emotions out of your trading, and always put your stop and losses and target gains, and you want to position your trades so your gains are higher than your losses, and not vice versa. So I
Okay.
think it's two most common mistakes is misallocating your capital to each of the trade, and then mismanaging your losers.
Okay, common themes that we hear from a lot of traders that come on our show. So let's say I'm a new subscriber to Tradespoon, and today's my first day on there. Could you just give us an example of what kind of information you would get, and what's on your radar for today?
Yes, so every day we provide you with a trade recommendation, and you can go to our daily picks. And every day we have a recommendation. What you will find is the chart, a proprietary chart, a proprietary qualitative analysis that shows you discounted cash flow model. It shows you the earnings consistency of each of the stocks, earnings predictions, and fundamental data. So you have a qualitative research, you can always look at that. Then we show you based on underlying option data, we look at the estimated move, where the stock is going to be at a certain time frame. We give you an expiration of our trade recommendation, whether it's 10 days from now or 60 days from now. We basically tell you, here is the options implied data, here's the volatility changes. What is the volatility today versus historical volatility? What is the estimated move of the stock? And what is the proprietary score, Tradespoon score, which is 1 through 10, 10 being the bullish and 1 being the bearish, where each recommendation is on that scale. And then for each of the trade recommendations, we also provide you a stock execution strategy or an option execution
Could you give us
strategy.
an example of one of those recommendations for today?
Sure. So we have Kruger, ticker KR. So if you believe in the niche food market stores, then KR is a great stock that has been outperforming the market for the past 4 quarters. They beat estimates. They beat an estimates last week, and we believe the stock is trading at a low PE and in a low historical range. And we believe that niche food market stores will outperform the market.
Okay, so you're
So
recommending a call spread or purchasing the stock outright, or
the volatility is low, so we did our analysis. So we bought a deep call spreads. So we bought at the money call and sold out of the money call, and the expiration is April expiration.
Okay, and what did
So
you
we
do?
gave ourselves.
What you
Yeah,
buy
go
the
ahead.
44 and sell the 46, something like that?
Yep, that sounds right.
Okay, all right. And what was the premium that you paid on that? Or I mean, market's not open yet, but what's your hypothetical premium for something like that? Is it they're making
I
you?
would say like probably $1, $1.50. I don't
Okay,
have a computer in front of me or the
okay.
chart, but
Well, if you're paying a
that would
dollar fifty for it, then you're looking at only 50 cents of upside if you're buying the 44 and selling the 46.
right. I don't have the quotes in front of
Okay,
me.
okay,
Then you might be buying 40. I'm not sure where's
okay.
the price of KR right now.
Okay. All right. Just any tips for for new traders, get involved in the business, and just close it out with a few tips.
Right. You probably want to buy at the money up. I mean, if you want to look at volatility, if the
Okay.
volatility high compared to the historical volatility, you want to sell the premium. So you want to sell, like for KR, you would sell a put spread. You can sell 44 put and buy 31 put.
Okay.
If the volatility is low, then you want to probably buy a call spread. If the volatility is low, you can buy at the money call and pay, let's say, $1 or $1.50 and sell the call. But you want to structure your trade that your gains outweigh your losses.
Okay.
And if the volatility is high, then you want to sell the premium.
Okay. Very consistent with what we've heard from our other traders that are active in the options markets. Well, Vlad, thanks a lot for coming on. We'll take a look at Tradespoon there, and we certainly like to have you on again as a guest on the show.
Thanks. I appreciate the opportunity.
Okay. Talk to you soon.
Take care, guys. Bye bye.